Hi, this is Zam here with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 11th of April. Starting off with the FTSE 100, which is still in that consolidation area, 7880 roughly to 8,000, looking for a break to the upside on the basis that we still have an uptrend line in the RSI window. We've got the 50 and 200-day lines rising, and we are allegedly within a rising trend channel from December. Top of the channel there, currently heading up towards 8160, which is our end of April target. Sounds a bit ambitious given the way that we're moving so slowly, but presumably at some point the price action will start to get more volatile. If we do break back below 78.80, then the next level down will be 78.90, basically December to March resistance for this market, and also near the floor of this rising trend channel in that 78.60 area at the moment. Moving on to the DAX, and here we've been pulling back, but it looks like we bounced off the floor of that rising trend channel yesterday. That's nominally around 17,900. That's roughly where we were expecting any pullback to hopefully finish. There is a chance of a test of the 50-day line, 17,600, but at the moment, with the RSI still above neutral 50, might get away with just bouncing off the floor of the October channel. We break through to new highs, 18,500 plus. The best case scenario target at the moment is 19,500 at the top of that rising trend channel from October as soon as the end of next month. Next up is the Dow. Here, slightly, I suppose, slightly disappointing, or maybe very disappointing if you're looking for a bull market here or a continuation of the bull run. Here we've not only lost the 50-day line around 38,900, we've broken through the floor of that rising trend channel from back in October. Next level down really 38,000, which was the February intraday support for this market. We need an end of day close back above the 50-day line in order to cancel out the latest breakdown and for us to be able to ignore that double top just below 40,000 that we had at the end or at the turn of the month. Moving on to Bitcoin, and here, I suppose we want new records all the time, but this market has to consolidate. What is useful at the moment is that we're on the right side of that broken March trend line. That was around 70,300 now, and the longer we stay above that, the greater the chance of move up to as high as 84,000 and the top of that rising January trend channel by the end of next month. On the downside, support there in the mid 60,000, so 63, 64, and then down to 6,000. But ideally, we stay above the 50-day line, 65,500. Moving along to gold, which delivered the goods basically in terms of the upside, hitting that September resistance line projection around 2380. Coming back now, and so the question is whether will we be able to stay within that steep rising trend channel from February. Support there around 2320, that would be quite a result, and if we stay above 2320, we're looking for the top of that channel there as high as 2470 by the end of next month, but obviously we've come up a long way in a short time on gold. Moving on to the stocks, and starting off with Altona, I think the company I interviewed a week or two ago. Here we have, when I type in the right company, we have a situation where it looks as though there's the beginning of a turnaround, broadening triangle base, and nice candles of late, just breaking that 50-day line there around 1.6 pence for the first time properly, hopefully since basically this time last year. Initial target here up to 2.5 pence. Maybe we can shoot up to the 200-day line, 3.2 pence, let's say, by the end of next month. But the obvious thing here is we want to stay above the initial April resistance around 1.3 pence. Next up is Brave Bison, and here a few bullish points on a stock that nobody really tends to look at. Here we had the unfilled gap to the upside back in January, bounced off the 200-day line at the end of last month, and we're now closing above the sharply rising 50-day moving average. Looks as though the shares are in a rising trend channel from this time last year. Top of the channel there, 3.4 pence, which we're looking for by the end of this month, perhaps, while we remain on the right side of the 50-day line, currently around 2.5 pence. Next up is Barkley and Gia, which is one of those where angels fear to tread situations. But here we've got rising 50-day line, which has been rising for a week or two. We're hitting the 200-day line around 19 pence and looking for up to 24 pence later this month. It's the first proper rally there's been. It's interesting that obviously the situation there seems to be dependent on the prospects of the government and licensing, etc. So it'll be interesting to see whether there are developments in that area. Moving on to Corero and £1.8 million contract from memory this morning. Here you can see the shares in a wide rising trend channel from basically this time 2 years ago. Top of the channel there at 18 pence, and we're looking for that while we remain above the recent resistance from last year around 10.5 pence. So gapping through resistance, normally a good sign. On to the punter's favourite, or hopefully will be the punter's favourite, the ECR Minerals. Here we had the minor bear trap from below the 200-day line, 0.28. Got a rising 50-day line now, and above that at 0.3 pence, looking for a retest of last month's resistance through 0.43. Obviously, we were looking for up to 0.6 pence by the end of this month, last month, but obviously the fundraise got in the way. But hopefully 0.4 plus this month, and then maybe there's a chance of 0.6 for the end of May while we remain above 0.3 pence. Next up is European metals, and here you can see that I've got a broadening triangle base, strong push through the 50-day line, the first time in a long time there, that 50-day line around 14.5 pence, initial target here 17.7, and then maybe up to as high as 22 pence by the end of this month, if we are lucky, which at the moment it looks as though we may be. Moving along to GCM, which has been championed here quite a lot, and here we have that consolidation between around 6.8 pence and 10 pence. Looks like we're breaking out of that range, and the good news there is that obviously then we could hit the top of that rising trend channel from November as high as 15 pence in the wake of any end of day close above 10 pence, which hopefully we'll get today. Moving along to another situation which we've covered here quite a few times before, Genedrive. Here, after the failure at the 200-day line, which was well, sort of exceeded our targets. I think the highest target was around 6.8 pence, but after the failure there, then we found support above the 50-day moving average. That's currently at 4.8 pence. The longer we stay above that line, the greater the chance of a retest of the 9.5 pence area by the end of April. I tweeted out about Harvest Minerals in the wake of its news yesterday. Was looking for 3 pence, i.e. for the shares to fill that gap up to that area. In fact, we narrowly missed it, but pretty close, has to be said. The high yesterday around 3.2 pence, top of the gap there, was at the 3.25 pence area. So interesting situation. But what we're looking for now is perhaps the shares to remain above the 200-day line. I think I was looking at the stop loss there around 1.75, where the low today 1.7 pence, so not too far out, but above the 200-day line 1.5 pence, looking for a retest of 3 or even 3.25 pence to fill that gap over the next 2 to 4 weeks. IQE is next, a bit of a bear target apparently, but so far the shares giving the bears a bit of a squeeze. You'll see here that we've achieved our first target there. That was around the 28 pence level, just below that. Next level up on an end of day close through 28 pence would be up to 40 pence, the upper parallel of that rising trend channel base from back in July. Next up is KDR, otherwise known as Karelian, and here you can see the shares have hit the first target there around 10.75 pence, but looking for 3.5 pence, perhaps as soon as the end of this month, while we remain above the February resistance at around 2.5 pence. MetalNRG has been one of the stars of the show this week, and obviously it appeared in the Bulletin Board Heroes just before that. We hit the initial target there around 0.08, in fact overshot it. The view now is that an end of day close above 0.08 could take us up to 0.12, perhaps as soon as the end of this month. Ideally, we remain on the right side of the resistance on the way down around the 06.3 level. Going on to Oracle Power, which is stepping up the news flow at the moment. Here you can see that we've gapped above the 50-day line, currently around 0.25, and above that, looking for a retest quite rationally of the March resistance towards 0.04. Perhaps the pullback there was the market expecting another fundraise, which didn't come, and therefore, if that is the case, we may easily return to the better levels of recent weeks. On to Panther Metals, which described itself as Accrington Stanley today, which I think was a bit harsh actually, but hasn't done the shares any harm. We've hit the first target there around 4.6 pence, above 4.6 pence, looking for up to 6.25 pence, perhaps as soon as the end of this month, given the way that both the 50 and 200-day lines are now rising, which means we should have a golden cross buy signal in the next week or two, and the run-up to a golden cross tends to be the strongest part in the cycle. Moving along to Synairgen, or Synairgen if you prefer. Here, I narrowly missed the top of that broadening triangle. That was around 10.7 pence. The view now is that we need to stay above the 200-day line, 6.8 pence. We could do that. Then a retest of the 10 pence area could be on the cards over the next 2 to 4 weeks. Finishing off with another bear target, and here you can see that Tern has returned to its 200-day moving average area, in this case around 3.8 pence. For the first time this year, we had previously the situation here is that any time the shares get up to the 200-day line, at least that's been the rule since 2022, that is the highest point of the range. So it'll be interesting to see whether we can get up to 5 pence on any end of day close above the 200-day line over the course of the rest of this month. Ideally, with the old resistance on the way down 3 pence, we stay above the 3 to 3.2 pence area. That's it for me today. More updates tomorrow.